Hey everybody, Joshua Phillips here with Churchill Mortgage. It is March the 21st. Yesterday was the first day of spring, so welcome to spring. Hopefully it's getting warm where you are and you're starting to get out there and thinking about looking at homes if you're looking to purchase a home here this spring or summer. But let's get to our market update as we always do on Friday. And my apologies, I actually wasn't able to get one out last Friday. But let's start with the CNBC headline. I saw this today, and it really just said a lot about where we are currently. One of the Fed presidents sees rates cuts depending on inflation progress. Well, duh. We need to see, what is going to continue to happen with inflation. That seems to be the key word we've been talking about for a long time is inflation going to keep coming down toward 2%? It feels like it's heading in that direction, but we've really kind of stagnated here in March. And of course, we did have a Fed meeting earlier this week. The Fed didn't change the interest rates. Fed Chair Powell did kind of indicate that he's open to some Fed cuts later this year. Although we got to keep in mind last year when the Fed cut the Fed fund rate, mortgage rates went up. So it's a topsy-turvy world, and hard to know what to count on. I'll just, while I'm on this page here, let's pull back up on CNBC. One of the things you can always check as a consumer is the 10-year Treasury yield. We want to see that go back down under 4%. Last September, we get down to 3.6%. If we can get back to that 3.6% rate, I think refinances will be a good opportunity. That's what I've been telling folks. Anybody looking to refinance is target 3.6% on the 10-year Treasury. That's when I would suggest pulling a trigger. As you can see here, we've actually seen the 10-year Treasury yield go from about 4.8% down to about 4.25%. So we are seeing progress and things are moving in the right direction. Okay, so let's pull over here to our mortgage-backed security charts. As I always share, mortgage-backed securities are where mortgage rates most directly derive their value. All you need to know is red is bad, green is good, and the higher the security price, the better mortgage rates are doing. And of course, obviously, the lower the security price, the worse mortgage rates are doing. Well, really what we've seen here is, January, mortgage rates improved, security prices went up. February, mortgage rates improved, security prices went up. But since the beginning of March here, look where we are. We have not really moved. We've seen rates get slightly worse. They maybe moved down an eighth, up an eighth. I mean, we just have not seen rates move much this month. Although currently we are sitting at about where we were 3 weeks ago. I think my market update 3 weeks ago said best rates of the year. That's about where we are. Best rates of the year, but we haven't really moved in the last 3 weeks. If we pull back real quick to that 1 year chart, we can see, we're way better than we were in early January. We have seen some great improvement, but we've kind of stagnated. Gosh, we stagnated this level back in December. We've been stuck at not being able to get above this level for quite some time. So it'd be great to see mortgage-backed security prices improve further. That's really what we need to see mortgage rates come down. For most situations today, rates are solidly in the sixes, and hopefully what we anticipate the rest of this year, although we don't know what's going to happen, but what I hope is going to happen is that rates will slowly decline through the end of the year. And of course, it's always a roller coaster, a little up, a little down, but we're hoping that rates will continue to improve. So, overall, pretty good. Again, we're better than we were in January. Rates were about 0.5% higher in January, so always happy for that. But just need something, be great to see something happen here where hopefully rates maybe could improve further. Guess we'll just have to wait and see. Well, hey, it is spring, so if you're thinking about purchasing a home, I'd love to have a conversation with you. I send this out for my wife, Amy. She'd love to have a conversation with you. We are here to help get you started on a pre-approval or whatever you need to start on your home purchase journey this spring or summer. We're here to help. As far as people looking to refinance, I got a lot of clients that would love to refinance. Again, we need to hold off, wait till that 10-year Treasury yield gets down. We want to see those security prices get back to where we were in September. We need another 100 basis points. And I think we'd be at a place where it might start making sense to pull trigger. So later this year, hopefully we'll see that. All right. Have a great, wonderful spring weekend, and we'll be in touch again later. Bye-bye.